and welcome to the first webinar of 2017. Today, of course, is January 5th in the new year. So, boys, a lot of things have happened last year. It's been a kind of a really crazy, bizarre year. And I kind of wrote about it a little bit in this week's update. All I read about is how hedge funds are getting hammered. They're not making any money. Last year was just a really difficult year. And, it's funny when you step back and look at the big picture, and we'll look at it it's part of the presentation here. But really the major low happened back in February last year. That was the bottom to buy. And, of course, the market kind of screamed up pretty much all year, with some blips along the way. Of course, we had the sell-off with Brexit, and then the immense rally after that. And then, of course, we had the sell-off before the election, and, of course, the tremendous, tremendous rally off the Trump win. So, the momentum, I think we're getting towards a price level and a time sequence where we're probably going to see another correction. But I want to start this whole projection idea with looking at some of the longer-term charts. Now, I didn't project out every one of all the major markets. As you know, the main one I'm concerned with is the S&P 500. But I think it's really instrumental here and important that we look at some of these other markets and where they are. And you can see here, here's the Dow. This is the Dow on the monthly chart. Okay, and again, a couple things to point out. I mean, this is the bottom going back to that March 9th, 2009 low, which many are calling a generational low, by the way. But I think what's really important here is this. The upper band is 19,741. When I pull this off at year end, and again, this closed out December 30th, because the 31st, of course, was a Saturday. But at year end, we were actually trading just above that upper band. Okay, so again, as we all know, this is a very, very significant level. And one of two things is going to happen. I mean, we're going to bust through these upper bands, and the upper band should act as support, or we will ultimately be repelled by the upper bands. Now, I bring that up because if you look here, the mid-band is 11,004. And, typically what happens is, it pulls back to around the mid-band. And you can see here, back on that bottom, back in 09, that's where support was found way back in 09. It actually breached the mid-band. We had that 1 month that closed underneath it, and then it recuperated the mid-band here. And then, as typical what's happened, it's run from mid-band to upper band, pulled back slightly, and now we are just above that upper band. So this is really going to be very telling here shortly as to what we expect. Yes, and that's the point, and it's a great point Andrew made. He says gold and a few other stocks actually traded above their upper bands for a number of years. And, I'm not saying that can't happen here with the major markets, but I think what we need to do is to be cognizant of the fact that it can happen. Because as we know, the markets are designed to fool everybody, or I should say most of the people most of the time. But here's your weekly chart of the Dow, okay, and you can see the swings here. The swing down into the bottom in February was a range of 25.25, and then it recuperated in basically 2 months and ran up 2,700 points. We had a slight 1,100 point pullback, 1,600 up, 785 down, and now we've gone 2,100 points already to the upside. All right, so we are getting a little bit overextended in price. I'm showing the comp because on the Qs, we don't have the benefit of using and plotting the extreme Bollinger Bands, okay? But again, if we look here, the upper band is 5,471.70. When 2016 closed out, it closed at 53.83. So we were basically within 100 points of that upper band. So again, I expect, and by the way, my feeling here is if we sell off against the upper bands, I think we have a retest of the upper bands. I don't think the market has an extreme pullback until we see a failure, or at least a retest failure. And again, here's the Qs. And by the way, one of the reasons I say that is because, again, if you look at the comp here, and you look at the technicals, I mean, the money flow here has just been extremely positive the whole length of this chart, which is a 10-year chart. It's never really dipped below zero, even back here in '09. And the comp did pretty much what the Dow did, okay? Breached the mid-band, and then it recuperated, and quite frankly, it was off to the races, since that time. All right, now, because the money flow to me has been positive, all right, I believe that, we're not going to see really a major shift to a bear market. And even if we do have a bear market, I'm not expecting it to be all that dramatic and deep. I think what we need to be cognizant of is the fact that, hopefully using our levels and our instruments here to measure oversold, we can get in at an extremely good entry point and just carry these instruments for some, substantial gains. And, again, I don't have to tell everybody here, that positioning yourself back in the bottom in '09 would have made everybody extremely wealthy. The question is, was that a major generational bottom? All the pundits can tell you under the sun that they all knew this, but the reality is nobody really knew that that was a bottom at that point in time. Okay, and here's the Qs. So again, I brought up the comp only because on the Qs we don't have the benefit of plotting the extreme bands. Now, this is the weekly chart of the QQQs, okay? And what you're looking at here are the major levels. All right, 87.5 was the major level. 125 is the next major level. I've drawn in blue the 137.50 because to me, that is probably the upper area that the Qs go before we get somewhat of a significant correction. And over here, you can see the confirming line up to 137.50 is 120.31. And interestingly enough, we have had multiple closes above that level. So in the grand scheme of things, I think that ultimately the Qs are going to test that 137.50 line. I really don't expect the market to get through that, not on the first attempt. And again, the way we can, how do I say it, the way we can position ourselves is simply this. We know that if the market does get through that, then there's a very high probability it's going to continue higher. If it's repelled, that's where most likely shorts are warranted. And again, I'm not a huge and tremendous fan of shorting against major uptrends, but if we can pick out major turning points, then it does become warranted. And I think that's going to ultimately be a major turning point. Here's the TLT, okay, on a long-term monthly chart. And again, we don't have the benefit of plotting the extreme bands. But we skimmy down to the weekly chart, and I'm sorry, this is the monthly chart. It's still a monthly, but I've drawn in the resistance levels. And here's my point that I'm going to bring up here. That 143.75 line on the TLT was very similar to that 137.50. All right, so that's that was a very strategic level in the TLT. And as you see here on the weekly chart, that ended up acting as, resistance. Now, here's the thing with the TLT, and this is quite frankly right now something that's intriguing me and puzzling me, quite frankly, because we've had a couple of scenarios here technically. We've had the situation where on the weekly chart, the TLT did breach the upper band. And normally when the upper band is breached, I typically expect a retest of that upper band, right? Now, we know that the Fed has come out and said they're going to raise rates. They've already raised rates in December slightly. They're talking about a few more rate hikes in 2017. As you can see, the TLT dropped from 142 down to 116. The resistance line, the immediate resistance line that I'm looking at is 121.88. And I feel that if it fails there, it's probably going to test 112.50. But what's confounding me here is that I do expect a retest of the upper band. And again, it may not be vividly clear on this chart, but the weekly chart is in an uptrend, and it's still in an uptrend. So that tells me that, the odds at some point favor rates dropping, not increasing. So again, that's a prediction I'm going to make here, all right, at the beginning of 2017. We'll see if that holds true. And here's GDX on a monthly chart, okay? And then here's the weekly chart. Now, again, as I've been pointing out, the difference between the GDX and the TLT is the fact that on the weekly chart, the GDX is still in a downtrend. Now, the GDX failed basically at the 31.25 level, right? The lower band level, lower extreme level, was 1250, and that's where it found support. And you can see how it consolidated down there and made that tremendous run all the way up to 31.25. Now that it's breached 2188, I expect the next rally to fail. And I think the outside level the GDX goes is 25. And then here's the XLE. Now again, this is a weekly chart. These are the major levels. The 81.25 is a very significant level. Okay, that's like the 137.5 on the Qs. That was like where is it? The TLT. It was the 143.75 level. So again, we have to be cognizant. And by the way, I believe, I don't know, I'd have to look at the numbers. I don't recall if it's confirmed the move up to 81.25. There's a minor line right in there at 78.13, and you can see that, it fell about 8 cents short of that. Okay, and it's pulled back. But essentially, it's been holding support at the 75 line. And again, like some of these other major markets, it's coming up and approaching a very significant level. Now here's the VIX on the monthly chart. Okay, and let me shimmy over here. This is a weekly chart, and it's very unclear and it's very murky here on a monthly chart. But the only thing I'm going to point out here is this. Way back here in 07, okay, the low it hit was 939. Right, and of course then we know it screamed up, peaked, and started to come down. And by the way, it had peaked before the bottom in 09. But if you look at this, I mean, it's really been trading between 12 half handle and at the upper end about 50. Yeah, we took out 50 in 2015, but essentially 50 has been the upper end resistance level. And as we know, we're back down to lower end support. All right. Now we go back to the weekly chart. All right. And here's the thing I want to point out. Okay. These are the major resistance levels. Of course, we've got 50, we've got the 25, the 12.5 handle. Underneath 12.5 major line is 6 1/4. The confirming line down to 6 1/4 was 938. Okay. And interestingly enough, um, 939 happened to have been the all-time low. So it's kind of, it was very interesting to me because it hit it. It came within a penny of 938 on that all-time low, and that's what precipitated essentially the bear market, really, back in 07 and 08. So this is going to be interesting to me to see if that actually, it's a good question. Andrew asked, how low can the VIX go? Theoretically, it could go to 0. I don't see that happening. I think if it does continue to drop, the furthest it drops is 6 1/4. But we know that 938 is going to be the confirming line down. So you know, of course, we need 2 closes underneath that level. But as I said, all-time low was 939. So we're really at major all-time low levels here on the VIX, and as we know, the past few days it's been tanking. So we'll look at it after I close down the PowerPoint, but I don't think it gets below 938. I really don't. All right, now we move to the S&P 500. Okay, here's the SPOOS monthly chart, and again, you know, here's again something very interesting. I mean, even on the monthly chart, back at the bottom, the money flow turned slightly bearish. It never really got tremendously oversold. Never really got oversold, which is really kind of surprising to me. And then once it recuperated, look at it, it's been positive ever since. And you know, it's funny, the other day I was listening to CNBC, or it might have been Bloomberg Radio, and they were saying that most individual participants aren't even involved in this recent run-up. When I say recent run-up, since 09. You know, remember, the market flushed a lot of people out after that bear market back in 08 and 07. So, you know, their theory being that if money starts coming back into this market, you know, especially by the individuals, you know, this market could be propelled higher. You know, my theory has always been, at least for the past few years, that a lot of this activity has been stock buyback, and it's corporations investing, you know, billions of dollars in their own stocks. You know, you can say what you want about all the high-frequency traders and all of that, but to me, they're a blip on the screen because, you know, they're not holding positions long-term. All they're doing is creating liquidity problems. You know, they're running a stock up quickly, getting out. You know, it's not affecting, to me, that doesn't affect the long-term trend of the market. Albeit, it would be nice to go in there and buy 1 million shares of a stock and sell it for 50-cent gain a few minutes later. That would be a wonderful way to make a living. But to me, that's all kind of false and phony activity. You know, the true proponent of the growth is really all the tremendous buyback activity that's been flowing through the markets. And it's going to be very interesting because Trump is already talking about repatriating a lot of the cash from overseas for these corporations. So, you know, the speculation is that most likely that, you know, and I think that's the current concern, by the way, from the government viewpoint is, okay, they allow this money to come back from overseas, you know, companies are just going to simply do more buybacks. They're not going to meaningfully enhance the economy with that money. I've seen people have various viewpoints on that already. But I think what they'll end up doing is probably come to some compromise that some of that money needs to be somehow infused back into the economy. That's my prediction, by the way. That's my prediction on that. So we'll see. Anyway, here's the monthly chart with the major resistance levels, okay? 2375 is in blue because, again, that's a significant level, all right? The upper band is 2275.70. We closed the year at 2238.83, so we were within 50 points of the upper band. Okay, now again, you know, we're at critical levels here. All right, let's make no mistake about this. But anyway, when we look at the major levels, 750 was a major level. We bottomed at 666. 1250 was a major level. And once we breached that, it ran up and took out the 1750. And, you know, now we are, our 2250 to me is the next immediate goal. All right. Of course, we know that 2183 is also a, I'm sorry, 2281 is another line just above that. But 2250 was a major line. All right. The upper end level is 2375. So that price is the level that I'd be very focused on in terms of a possible major reaction. And then here's the weekly chart encompassing the last two years of activity. And again, now here's the swings when we take a look at the swings here. So what I've done is I've measured all the swings, the last major swings we've had, along with the time frames for each swing. All right, so we can see, as an example, this was the major bottom, 211.16, back in 2016, the major low. And again, if you recall, you know, the beginning of last year, the market was essentially tanking pretty strongly, and then it found support, and, you know, it was kind of off to the races since then. But you can see the extent of the swings, 300 points roughly, 250 up, 310, 202, and 110 down. Now, I didn't measure this swing, and, you know, we'll go over why. But when I project out the last three up moves, and again, I'm not taking into consideration the up move into the end of the year, okay? Because essentially what I'm doing is I'm going to project off the bottom on 11.4. Anyway, when we look at it, the average up move is roughly 12 weeks, and it roughly lasts 250 points, which would basically mean the next top projects out at 2338. Which is very close to that 2375 line. And I've said, look, we are overextended in time. Now, one of the things I want to point out here is this. Oftentimes, these dates become anniversary dates. So 211 is a very key, to me, is a very key time period. Because again, if we look at this, and if we replicate the 18-week swing, all right, where the heck is it? Okay, if we replicate the swing up until April 20th, that went 18 weeks, all right, the average is only 12. So if we replicate that swing, it projects to a top around 2.3. And again, 2/11 is a major anniversary date. So that's roughly within a week. So what I'm saying is it's possible we have roughly another month here of this bull leg, and then probably we'll correct. If we look at the down moves, the last 4 down moves, they average roughly 200 points with an average of 12 weeks. So that's about a 3-month average. Now, if we assume a high on 210, it would project the bottom down to roughly 2130 on 428. If I project the next top off of that, it would come to roughly 2384, which again, to me, is very significant because it's right back to that 2375 line. And that would project the high up on July 21st. The next bottom after that would bring down to around 22, roughly 2200. And that bottom would come roughly October 13th. So that's how I projected it out for next year. I didn't want to get too complicated. I'm not going to project out all the other markets because to me the S&P is the major market here. Now again, these are rough guidelines, all right? You know, there's a couple of things we know right now. Number one, we know that the VIX is at all-time lows. It doesn't mean it can't kind of hang around down here, all right? And we also know that all the major markets are kind of butting up against their upper extreme Bollinger Bands. Now the question is, and I think I brought this up in one of the updates, you know, what's going to be the impetus for a next bear market? You know, going back to, let me go back to the monthly chart here. So we can see it here, and I'll point out what I'm going to say here. If we look at this and we count the number of years off that bottom in 09, 1, 2, 3, 4, 5, 6, 7, 8, we're in the 8th year of this bull market. Now, typically bull markets last only 5 years. That's the average. So we're like 3 years overextended in time. So the question is, and you know, I guess the answer to this, we're not going to know. You know, but the profound question is, you know, what's going to be the cause of the next bear market? You know, to me, it's been yet to determine. You know, is it going to be a global trade battle? I don't know. I just do know that at this point I'm pretty cautious and concerned that we are overextended in price and time. And, you know, look, we have very definitive price points that we can follow, which is a good thing, all right, because we know at this point what we can react to. And the important thing, by the way, too, is we know also if all of these markets take out the upper bands and say they hold support at the upper bands, all right, we know that there's going to be a very, very high probability that the upper bands get tested again at some point in time. So what you're really going to want to do is target that next bottom. And I'm going to bring up something here. Bear with me, guys. Okay, there we go. All right. And this is something I want to show because I brought this up in this week's update about how, you know, one of the things I really like is I like trading high-yielding stocks, okay? You know, to me, it's sort of like doing a covered call, except for the fact that usually you're not collecting as much in a dividend as in a call premium. But again, you know, the trepidation last year has been the fact that call premium has been essentially very weak, okay? And there's been very few stocks suitable to even do covered calls on, right? But you know, one of the things that I mentioned in this week's update is that, you know, yeah, if you could go in there, time some of these purchases using the extreme bands, buy them on oversold conditions, you know, you can just sit and collect monthly dividends, and a lot of these pay monthly dividends. And I'm just going to show you an example of a few of these as we talk. All right. For example, here's, and again, this is a BDC. All of these stock charts are BDCs, all right, which are business development corps, and by law, they have to pay out 90% of their income in dividends. That's the way they're structured. But here's one TCRD. You can see back here, back in February, it got below the lower band, at bottom at 756, and it ran up to a peak of 11 roughly, and then it pulled back for a few months, and now it's running back up. And again, you know, so again, if you look at this, say you bought it at 9 even, you know, you have some gain, plus you have dividend income. Here's another one, TCP Capital. This was sitting right on the lower band at 1157. It's now 17. So if you look at that, that's a, what, 17, 12, 5. That's roughly a 50% gain, plus all the dividends. Here's one that I mentioned I own, Prospect. It bottomed at like $5, and now it's 8.5. So this is almost 100% return. Plus, as I said in the update, this pays 8 cents a month. And then here's another one. Okay, this is Gladstone Capital. This bottomed at 5. It's almost 10 now. So this is almost a double. And then here's one. By the way, this is one I did trade recently. This was BlackRock Capital. That bottomed at 660. Not a huge gain. Ran up to 840. Dropped back to the lower band. Here's your retest. And then came back for the higher bottom here. And, you know, anyway, they can be fun to trade is my point, too. And let me see what happened to Aries. Okay, yeah, Aries was below the lower band. Dropped to 11, and now it's up to 17. So that's about a 60% cap gain, plus, you know, plus you've got all the dividend income. So yes, these can be, to me, these can be fun. And, you know, here's the whole point of this. By using the extreme bands, you know, you can measure the extreme setup. And, you know, you're not going to be that far off. If you buy below the lower band, I mean, if it moves a little bit against you, you know, so what? Eventually it's going to pop back up because people want that yield. And interestingly enough, if you notice from these charts, these stocks have continued to go up as rates now are increasing. You would think the opposite would be happening, but that's not the case. Now the question is, how do you find these? All right. I'll show you the site that I like to go to. It's called Dividend, I think it's detective.com. Okay, this is the stock. It's kind of a, I don't know, cheat-y looking site, but if you go in here and you scroll down, here's the BDC directory. All right, so it lists all the AINV. This is another one, AINV. Okay. Let's see, AINV. All right, well, look at this. This bottomed back here at 377 is now 6. But this lists all the BDCs here. And then they have, I don't know, here's best closed-end funds. So these are somewhat similar, okay? Let's see here. There's the PHK. All right, let's take one just as for grins. Let's look at JCE. Because what happens with the closed-end fund is they will trade similar to a BDC in that when they get oversold, excuse me, when they get oversold, they're usually a good buy as well because they're going to pay a fairly decent yield. But the point is that this site here gives you all of the, it'll give you all the, it even has a master limited partnership directory. Some of it might require paying for, but here's master limited partnerships. Here's pipelines as an example. All right, it's got NuStar listed. Yeah, I'm kind of looking for one that fell off the table. HEP. Let's see what HEP did. Yeah. All I'm suggesting is we measure them with using the extreme Bollinger Bands. Let's see, SXL. Let's take a look here. Let me put up 10 months on the daily. Okay. Yeah, never got really oversold here. But I'll tell you one that did was ETE, which is a master limited partnership. Okay. If you look at ETE, and you can see the hammer down here at the low back in February. That month it closed at 5 1/4, and now it's trading at 19. Now you'd have to put up, you know what, we're not going to be able to see it, but I believe this was way oversold. Okay, there it is. All right. You can see here that it kept diving underneath the lower band, and finally it reversed. Hit a low of 376, ran up to almost 20 now. But they were mired. By the way, ET was mired in this issue with Williams. They were going to take them over. Then the whole deal got canceled. But anyway, the point here is that this is how you can find those using this site. He's even got a graveyard here, MLP graveyard. Wow. Natural gas pipelines, yeah. So it's actually a really, by the way, it's a really good site to find high-yielding stocks. And you can even read about what a closed-end fund is. And you know what's interesting about a closed-end fund, unlike a BDC, BDCs really only expand their, how do I say, they grow based upon the issuance of more debt, not debt, more equity. So as the stocks get higher in price, okay, to expand their offerings, if you will, they'll issue more shares, which dilutes it, okay? Which is why typically when they issue shares, the stocks will drop, and then eventually they will recover as they start to invest that money. But now that they're all kind of at upper end levels, you know, I would expect them to start doing offerings. I know Ares is doing, they're acquiring, Ares is acquiring ACAS, which is another BDC. So I know they're going to be they're going to probably be issuing equity to acquire that company. But ACAS, you can look at their stock. You know, they never quite got oversold, never hit the bottom band, but you know, that's up 50% last year. Okay. All right. Anyway, any questions? I didn't want to, by the way, I didn't want to make the projection too complicated because I feel that we have to react this year, and obviously, you know, obviously at this point, you know, I'm looking for a reaction to occur here, and we're going to have to just continue to monitor this pretty much daily. I'm very cognizant of those upper end levels on all the major markets. I recommended this to a friend of mine, by the way, and he bought it, and I just texted him, said, "Did you sell out yet?" And he said, he's got an order in to sell. He probably got out today. Okay, let me see. Trump tax cut. Trump tax cut alone could boost the corporate earnings 10 to 20% next year, I hear. But that's something too obvious never works, too. Yeah, I guess the question is, you know, what is Trump going to be focusing on first? And what are they going to implement? Because, you know, they're not going to implement all this stuff. You know, and how much of his campaign speeches, et cetera, were really stomping, you know, and what's really going to come to fruition? I mean, I don't ever see this guy building a wall, you know. That seems to me to be a little impractical. You know, tax cuts, absolutely. I mean, you know, we heard from Pence yesterday saying that the first on the agenda is going to be repeal of Obamacare. You know, the question is, you know, and by the way, he tweeted out today in response to a comment that Schumer made that I think he called him a clown. So it's all getting very interesting in D.C., and this guy hasn't even taken the oath yet. But, you know, I'm kind of hoping that they can institute something that really works. Okay, good. Shin said he made money on U.S. Steel. Good for you. Yeah, you know, it's amazing, isn't it, how those material stocks ran. You know, look at the run on Freeport. We know the run on U.S. Steel. Okay, I mean, you know, it broke out at 17 and ran up to 39, and something similar happened on, you know, Steel Dynamics. I mean, look at Steel Dynamics. That broke out at 23, and it hit a high of 40. And I have to say, I got assigned at 27. There's no way I expected it to go that high. But again, it goes to show you that you know, once again, how the markets tend to fool you. And, you know, they can run a lot farther than we think they can run. Yeah, let's really hope Trump does well. I mean, you know, I got to tell you, if anything, you have to be happy about how the general public and the market, I mean, the market obviously is a reflection of the general public, has reacted to Trump being elected. I mean, all of a sudden, you it's like there's a new sheriff in town, and this guy's going to correct all ill wills here in our country. I think that's a bit of an exaggeration, but I think that the fact that he's buoyed confidence is something that's very important here. I mean, look at this fund that Apple's going to invest in. They're talking about bringing 50,000 jobs to the USA. That SoftBank fund. He's already chasing companies down and threatening them if they leave. So, I mean, I think it's a good thing. I'm just chuckling at a comment here. But, yeah, it's like there's a whole new regime here. And, there's a whole new buoyed confidence in business growth. And I think the fact that he gets rid of regulations is going to be a major issue. At least small businesses can grow, and, we don't have all this restrictions hanging over everybody's head. But yeah, I mean, we look at the reaction here of the S&P since that election. It's just been remarkable. I mean, this has been totally remarkable. And again, it's remarkable given the context that most of the pundits were predicting that the market would go down if Trump were elected. So again, I guess if there's anything that I can preach from my high pedestal is the fact that never listen to Main Street media. Usually they have it all wrong. And once again, they had it all wrong. Amazing. Well, I shouldn't say it's amazing, but it's just another example of that. Anyway, any questions? We've got a little more time. If anybody wants to look at some stocks, we can take a look. Or if anybody wants to look at anything. Yeah, I didn't get back. By the way, I didn't get back into BKCC, which I am remiss to say I didn't. I was in a few other deals, which I've already closed out. But I love, by the way, I do love trading high-yield stocks. And, I'll just sit with them, if they're not going my way, because some of them I trade, some of them I hold long-term. I mean, it's no mystery that I own Ares, and I own Prospect. I did own Heritage, and I didn't put it back on, but I have owned that in the past. And it is a good company. Let's see what they bottomed at. Okay, they bottomed about $9. Yeah, I should have been putting that back on. But, if you look at these, again, if you look at some of these on Yahoo and you see the dividends they paid, they're really very healthy. And, what I used to do is have an Excel spreadsheet, and I'd track them. Okay, here's the dividend amount. This is what it's yielding. And then when they get down to a certain level, the yield, obviously increases. For example, I'll show you what I mean. If we look at, let's look at Heritage as an example. Earnings have been slow, by the way. We're kind of at the end of the tail end of the season. HTGC. Chipotle upgrade. All right, let's see here. Okay, so Heritage, I used to call it Heritage, Hercules. Okay, they're paying 31 cents a quarter. Times 4, that gives you $1 a quarter. When it hit $9, that yield was 13.8%. So you can see, it's almost a 14% return. I mean, that's better than you're getting in real estate or any other instrument out there today. Now, on $14, I'm not that excited. It's $1.24 a year on $14.40 price. It's about an 8.6% return. See, I always kind of looked at it. Like, it's a high yield situation. Yeah, and you don't have to mess with tenants. Absolutely. But yeah, I always looked at it as these things kind of creep over 10% return, now they start to become attractive. And I bet you most of these BDCs, when it dropped back at the beginning of this year, were probably all yielding over 10%. That's an incredible return. Christ, Prospect's return when it bottomed was about 22%. So if you think about it another way, in 5 years, your dividends paid for your stock. And, of course, it's almost doubled this year. So you have 100% gain on top of, a 22% return. So that's fairly significant. Okay. Let's take a look at Apple. All right, Apple's climbing. It's up to 116.75. I just saw that headline on Yahoo, so I was curious as to what it was doing. Not really breaking out huge, though. Kind of slow right now, by the way. Okay. Yeah, I haven't really looked yet for tomorrow. Let's see here. We're getting a jump up in, wow, this little call jump to 12%. A lot of the most active today, biggest gainers are the gold stocks, like Goro. They're all kind of popping here. And the GDX, I'm sure, is up. Yeah, okay. So that's popped 6% today. Let's see here. This is really, I got to tell you, this Yahoo Finance to me is really disappointing. Oh, let's look at Chipotle. Let's see what's going on with them with the upgrade. All right, they were up nicely, $10. This was a situation where Chipotle was really very close to crossing into an uptrend here. And as you can see, it came back, filled the gap, and then it pulled back, and now, obviously, it's bouncing up on this upgrade. I'm kind of hoping that if Chipotle can cross into an uptrend, this would be a really great candidate to do some spreads on. So I think it's going to take off. Yeah, the real, a lot of the KSS is getting clobbered. I think they came out with a pre-announcement that sales were slowing down. And again, look at this, up above the upper band, and now it's selling off. But I think that'll eventually be a buy. A lot of these retailers are being priced like they're going out of business. It's like Amazon is putting them all out of business. It's really remarkable. Macy's is selling off big today. Kohl's, of course, as we know. Let's see if there's any other retailers on this list. LB Brands, here's another one. Man. See, now this to me is a short. And you can see what a short was, right up against the mid-band. Son of a gun, it's down, what, 14, 15 bucks since that point. I'm sure Ralph Lauren is down too. Let's see. Damn. Realtors are really getting hammers. Sears is burning the furniture to keep warm. Oh my God. Yeah, Ralph Lauren is down too. Sears, forget it. Well, they had a little snapback. And look at this. I'm going to put this up on a month. Wow, this may have bottomed. Let's look at a monthly chart. If I'm not mistaken, Sears was trading that's only 10 years. Let me put up 20 years of data here. Yeah, look at that. It peaked at 141. And it hit a low of $8 last week. Unbelievable. This is another, who's the guy behind this? Is it Ackman? I don't know. But, it's funny. I go to my local Sears here, and there's like nobody in the store. It just seems really, it's almost like you can shoot a gun off in the store. There's like nobody there. And, talk about dated. The store here by me is probably built in 1920. It's a beautiful building, by the way. That's where everybody's saying the value is in their real estate, not really in their retail. But I don't know what they do to resurrect that. Sort of like Kmart. I think eventually it just disappears. And what's interesting is probably within a half a mile there's a Target or Target. And you go in there, it's brand new and it's clean, and they offer a lot of stuff. Anyway, that's about it. The main thing I wanted to talk about today was the projections and showing some of those high yields. But yeah, that's a good point. Yeah, I don't think it's Ackman. You're right. Oh no, you know who it is? It's Eddie Lambert is the guy in this. Eddie Lambert, I think, was a hedge fund guy who had all this money, who kind of took over Sears on a play like a kind of an icon play, where he was going to infuse all his money into it and help this thing get going. And obviously it didn't work. Retail is just such a tough, to me, retail and hospitality, restaurants, are the toughest industries to make a buck in. All right, well, listen, I think I'm going to close down. It's after 1 o'clock. If there's any questions, shoot them through. If not, I hope this has been informative. And, you know, we'll continue to monitor all the price levels. I couldn't think of the guy's name, but yeah, it's Eddie Lampert was the guy. I'm just checking to see if there's any other questions or comments. Yeah, I'm glad you made money on steel. Steel was a heck of a trade. And, you know, all of those were unbelievable trades. Those unbelievable trades on those material stocks. All right, good. I don't see anything. All right, guys. Well, listen, thanks for being here. And we'll convene again in 2 weeks. Thank you very much.